very good morning. It's finally Friday. Have a good day ahead. Welcome to today's episode of Morning Well. Walmart and Barclays earnings, US jobless claims tick up, and USD gives up gains. These are the things that we'll talk about. US stocks dropped to the lowest levels in more than a week, and Treasury yields edged higher on Thursday amid growing concern rising borrowing costs could sap a rally that's driven equity values to historic highs. The Euro Stoxx 600 sank 0.8% as well. The MSCI All Country World Index fell 0.5%. The Bloomberg Dollar Spot Index fell about 0.2%. The Euro rose 0.4% to 1.2092. The British Pound jumped 0.9% to 1.3975. WTI fell to $60 a barrel. Gold depreciated by about 0.1%, while copper jumped 2.3%. to 3.91 a pound. On the corporate earnings front, Walmart was the big company reporting. Walmart sales rose during the fourth quarter due to strong holiday shopping, with an additional boost when US stimulus checks arrived in January. Food sales went up as the quarter progressed, is what the company said. The company reported strong holiday sales but predicted slower growth and higher spending in the current year. US comparable sales, or those from stores and digital channels operating for at least 12 months, rose about 8.6% in the quarter ended Jan 29th, and an acceleration from the third quarter when sales had climbed about 6.4%, and higher than most of the analysts forecasted on the street. US e-commerce sales, which include online grocery orders, increased 69% from a year earlier. All this led to an adjusted EPS of about $1.39 during the quarter, lower than the $1.51 the analysts had expected. Walmart spent about $1.1 billion in the quarter on COVID-19 related expense, such as increased pay and benefits. The expense was partially offset by reduced travel and professional service costs, is what the company said. Walmart said it expects lower profits and slower growth in the new fiscal year. It forecasts US comparable sales could rise by a low single-digit percentage compared to the 8.6% growth that we saw in the fiscal 2021. Walmart, like many other businesses during the pandemic, had stopped giving financial guidance in the recent quarters. The stock fell about 5.5% in trading on Thursday. Like recent quarters at Walmart, the number of shopper trips declined, but the average each spent per visit went up. Some shoppers have avoided stores for health reasons but are making the most of each trip. During the most recent quarter, US visits declined about 10.9%, while the average amount spent went up 21.9%. Unlike many retail competitors that were struggling before the pandemic hit, Walmart had already invested heavily in e-commerce, including online order parking lot pickup, a service that has grown in popularity as more shoppers avoid stores for health reasons. Retailers generally have reported mixed results over the unusual holiday season that started early and relied heavily on e-commerce sales. Amazon said quarterly sales had jumped about 44% to about $125 billion, while Target's comparable sales in November and December rose 17% compared with a year earlier. Moving on to Barclays. Barclays posted a profit in 2020 as buoyant securities trading made up for lackluster performance in the UK, where the bank expects pent-up savings to give economy a boost as the coronavirus pandemic wanes. Net profit at the London-based bank fell about 38% from a year earlier to £153 billion. Profit at Barclays Corporate and Investment Bank rose 29% to about $2.55 billion. Shares traded lower though on the results. The bank also said it intends to pay a dividend for 2020 and buy back up to 700 million of shares. The proposed dividend of 1 pence a share was less than what some investors were expecting. On the economic data front, we had jobless numbers come through yesterday. The number of Americans filing for unemployment benefits rose to about 861,000 in the week ended February 13 from the previous week's revised figure of about 848,000, and compared to the market expectation of about 765,000. It was the second straight increase amid a lack of fiscal support and as COVID-19 related restrictions still weigh on businesses in many states. This data definitely weighed on the US dollar. The post-retail sales rally in the US dollar did not last as greenback resumed its slide against all major currencies yesterday. This decline was somewhat surprising given the sell-off in US stocks and the rise in US Treasury yields, which typically should coincide with a stronger dollar. However, the pullback was supported by economic data. While the Philadelphia Fed Manufacturing Index beat expectations, activity slowed from the previous month. Jobless claims also jumped, as we spoke earlier, from about 793K to about 861K last week. Building permits rose, though, 10%, but this improvement was offset by a drop in housing starts. Ultimately, none of these reports had high impact for the dollar, but they reinforced the lack of demand for the greenback. Sterling benefited the most from the US dollar weakness, with the GBP USD traders driving the pair towards 1.40. With no UK data to spark these gains, the moves seem purely technical. That's the update. Stay safe and healthy. Have a lovely weekend, and I'll speak to you on Monday. Thank you.